Good afternoon, everyone. This is Chrissy with Ahn Co. It's Monday, March 9th. I'm going to go over the markets with you. It was an ugly day really across the board. You were able to see Chicago wheat come back and corn get a good close. Corn was still negative on the day, however, but the rest of the markets were really negative, and it started with those outside markets on two kind of black swan events that came together. One being the coronavirus that we've continued to deal with over the last couple weeks. You're starting to see that amplify itself in the United States, and it's more of a concern not so much on the actual virus, but what it could do to the economy on a travel standpoint. So you're already having big companies start to restrict travel. You're having people cancel their plans, cancel their vacations. You're having people not choose to go out to eat. You're having people decide not to go shopping as frequently because of their concerns here, and that's all weighing on the economy and seeing that. So for the first time since 2008, you saw a halt into the stock market for the Dow trading. And what happened there is they have a circuit breaker rule that they put into effect that if you crash more than 7% of value, they halt trade for 15 minutes, hoping to kind of get your emotions checked, see what we're coming with, so you have a chance to get out if you want. And then if it were to fall more from there, they have additional rules. But we paused down 2,201 points, and then we're able to come back off that, but now we're back down 17 to 1,900 points on the day, so being roughly about 6.5% of value lost into the Dow today. And so that was weighing on the market. US dollar was down 1. Crude oil was down over $10, and that's the second black swan event. You had Saudi Arabia say they were going to flood the market with crude oil, and this came on the fact that OPEC wanted people to cut their oil production, which they typically do at lower prices. Russia said they weren't going to cut their production. Saudi Arabia came back and said, well, we'll just flood this market because they can sell their crude oil at a loss for a sustained amount of time due to the reserves that they have and the money flow that they have. And so that fear to the market. Now you have crude oil over $10 lower at $30 a barrel. You were down at one point about 34% of the value of crude oil. So those outside markets just took a tumble, and that affected the rest of the market. So corn market, like I said, good close on corn, still down 3.25 cents on the day. Soybeans, however, really didn't get that chance to come back, down 21 cents. Chicago, like I said, Chicago wheat got that comeback up over 3 cents, and then a little bit of pressure still showing up into Chicago or Kansas City and Minneapolis wheat. Meat markets are so closely tied to the Dow and the stock market that when you see that fade like it is, you can't really help it with the meat market not being able to separate itself. So live cattle down over 290, feeders down lock limit of 450, and then lean hogs down 290 as well. So really we need these outside markets to kind of find a bottom, calm down a little bit to stop putting so much pressure on these other markets, or we need some stories to take over the market, which would be, seeing that demand start to increase, seeing some private sales. We did get a private sale this morning, a small one in soybeans to unknown destinations, which is typically China. That's a great start, but we need to see some big ones to turn this market around or be able to separate those markets from the negativity into the outside markets. I do have to close with a disclaimer. Trading futures and option involves risk loss and is not suitable for all producers. This is a solicitation. Have a great day.